All right. Well, let's just begin, shall we?
Yeah.
Let's just begin. So that way we can get everything going. So today,
Okay.
so today, what are we talking about? We're gonna be talking about five things.
Okay.
We're gonna be talking about five things. Um, just so that way we can educate everybody that's looking to buy right now, sell right now, um, and maybe we could start by introducing you, Lisa. Just because
Sure.
I mean, you've been on a few of my videos, so I'm pretty sure everybody know who you are if they've watched that clip. But just in case, we got some new subscribers here, some new Chi fams. Maybe you could introduce yourself.
Okay, sure. So we've settled on Chi Chi fam, right?
We did. We got majority of the voters on Chi fams against Chia Pets. So Chi
All right.
fams it is.
So Chi Chi fam. Apparently, I am a Chi Chi fam myself. Hi, everyone. I'm Lisa Nguyen with A New Lending. I am local here in the Elk Grove area, and I've been a mortgage lender for about 12 years now. And so far, the market's been really, really great. I'm very, very blessed to be able to help so many families and looking forward to really helping more families out there. So, we're here to answer any questions that you may have. There's a couple of topics that we keep hearing, so we're going to address those topics today, and hopefully, we'll have some fun with it too.
Yeah. No, we're gonna have fun. I already know we're gonna have a lot of fun.
Well, if you guys don't know, Chi and I always have fun. He's my brother from another mother, and we just, bounce ideas off and laugh at it. And we have a great time.
Yes, we do. We try to have fun just because
Yeah.
if we're not trying to sound so robotic.
Well, it's not only that too. I mean, home buying, it's a daunting task sometimes,
Yeah.
just like honestly getting married and whatnot. Everybody gets really, really stressed out and nothing is supposed to go perfect, right? Well, we're gonna get you to the most perfect situation that possibly can so that you want to know a lot of these quirks up front so you can
Yeah.
prepare yourself and make sure that, hey, did I line my ducks up all in a row so that when the time comes and everything like that, if plan A fails, this is what we're going to default to plan B.
Yeah. For sure. Um, so it's always good to prepare, right? I
Mm-hmm.
always like to say, I'd rather tell you everything up front, Mr. and Mrs. Client, versus at the end, so that way you can prepare for all surprises, right? I think it's better when they have all the options to choose from. But for anybody that might be tuning into the live stream, comment in the live chat like where you're watching from, and if you guys have any questions, because if we do have time, we're probably gonna get to those questions towards the end. Maybe if you guys have a question specifically about mortgages or loans, etc., etc., Lisa's here. Lisa could probably answer majority of those questions. So if you guys have any questions at all, make sure you guys put it in the live chat. And then for those of you guys that are probably gonna be watching this live stream replay after this session has ended, like this video, comment down below. We'll do more of these live streams on a weekly basis, just so that way we could interact more with the Chi fams, and also just have fun with this. It's Friday, TGIF, right? So
Woohoo.
just curious what everybody's gonna be doing after today for the weekend. So comment all that in below, because it looks like there's 6 people on right now. Okay, so why don't we start with the first topic, Lisa? Because one of the Chi fam members mentioned they were curious about PMI payoff. They wanted to know how to calculate PMI, if they were interested in paying that off, and going over the pros and the cons when it comes to paying off PMI. Can you talk a little bit more about that? I kind of know, but because I'm not a loan officer, I know there's certain things I cannot say. So that's why we have you on the live stream. So can
Well,
you share a little bit?
yeah, absolutely. I'm more than happy to share that. And for those of you that are tuning in who've never bought a home before and don't know what PMI is, PMI is private mortgage insurance. It's insurance the lenders will require for you to have to secure the backing on your loan. It protects the lender. So a lot of people get confused with this and mortgage insurance versus home insurance. Home insurance is kind of like car insurance. It protects you from theft, liabilities that happen in your home, fire, things like that that you would be insured on a vehicle. Mortgage insurance is the protection for lenders just in case the home goes into foreclosure. So why is it needed? It's needed because if you're asking for 100, 200, 300, even $1 million and whatnot, they're going to want some sort of security that in the event that life happens to you, that they're secured on their situation as well. So PMI is for conventional loans that are less than 20% down. So if you're looking to do a less than 20% down, which for first-time buyers, we highly recommend. First of all, as a first-time buyer, there's going to be a lot of things that you may not see. Things break, even a brand new house. Sometimes things leak, sometimes things weren't done properly, and sometimes there will be a warranty on that. But if there's not, or the warranty is just doesn't cover enough or whatnot, we always want you to make sure that you have a little bit on the side to have that ready for when that time comes. So this is a great option so that you don't have to wait to have that 20% down. You can put as little as 3% if you're a first-time home buyer. If you're not a first-time home buyer, then you can put down as minimal as 5% down, okay? PMI ranges from roughly about 0.15%, that's less than 1%, okay, up to 2% of the loan amount. And that range varies depending on the combination of how much you're putting down and what your credit score is. So if you're putting more down, then your mortgage insurance monthly is going to be less. If you have a higher credit score, that risk for the lender is going to be less as well. So that mortgage insurance combination somewhere in between will determine what your monthly mortgage insurance is. So for a conventional loan, if you already have it, this is the way that you're going to get rid of it. You do have to have it for 2 years, as long as you've built equity in your home. If your home increased by 20%, then you can go into your lender and have that removed, okay? If it goes to 22%, then it would be automatic. But I would recommend if you get to hit that mark, why wait? Just try to get rid of that, because that's just money that you don't have to pay if you don't have to, okay? So that's for private mortgage insurance. For FHA and government-backed loans, it's actually a little bit different, okay? It is MIP, mortgage insurance premium, which is very, very similar, but the only difference is if you put less than 10% down on an FHA loan, it's going to stay on the life of your loan until you refinance your house or you sell your house, okay? And it really depends on how much you're putting down, whether or not the amount is a high balance. FHA ranges roughly from 0.45 to 1.05, okay? So FHA, the good thing about FHA is it's a lot more lenient on credit, and it's a lot more lenient on the mortgage insurance part, okay? If your credit's not exactly where you want it to be. Conventional, if you already have that great credit and whatnot, it might be better for you on that aspect.
That's good. I hope everybody heard that, because that was a lot.
That's a lot of information. I know, and a lot of times it can get a little bit overwhelming. It's easier when you're in the situation because there's so many loan programs out there and so many variants that makes it a difference. So your loan officer should be able to cater that to you to see which one is the best for you. And by the way, if you have a really great credit score, there's an option actually that you can pay for that upfront. Most people just don't do that just because it can get quite expensive. But again, it's the combination between your credit score, how much you're putting down, and everything like that. So if you don't have to have that, that might be an option as well.
Yeah, and I think it's good for people to know what their options are, and like it's not for everyone, right?
Correct.
Maybe your situation is unique to where you might not want to pay off the PMI upfront, right? You could probably
Right.
use that resource towards something else. So that's good that you mentioned that as well. So another question that I think we received from the Chi fan members was they wanted to know more about the Biden $15,000 tax credit,
Doesn't
and
everybody though? I
everybody
mean,
wants to know about
it's
that.
free
But
money, right?
yeah, but then to a certain extent, right? I always like to say that when there's free money involved, like don't even get me started with the stimulus check right now. But then like when there's free money involved, who's it coming from?
Yep.
Is it
Yep.
now or is it later? It's coming from somebody's pocket. But anyways, we're not going to talk about that today. We're going to be talking about the Biden tax credit, the up to $15,000 tax credit for home buyers.
Correct.
Let's talk about that a little bit. I already kind of know where this is going to be headed, but then I think a lot of Chi fan members don't really know, and so maybe we could talk more about this uh, topic.
Okay, so as when Biden came into office, he kind of wanted to mirror that same type of incentive as Obama did in 2008 to 2010, and it's a great incentive. But you're very right about that, Chia. Anything that's you know out there, it's not free money. Yes, when you utilize that money, you as a homeowner aren't paying for it back, which is a wonderful, wonderful thing. But we as taxpayers, we all pay for these programs. We all pay for the stimulus programs one way or another. And I'm more concerned that it could be through inflation later on, which will be for another topic. Okay. But as far as that tax credit, it hasn't taken in effect yet. And what it is the difference between this one and the one that Obama proposed in 2008 is that you can actually use it while getting the loan. You could use it to actually put it as a down payment or closing cost credits from what we understand. Okay. It hasn't been finalized, so we don't know the exact guidelines of that just yet. But it's to help incentivize more home buyers to purchase homes. The issue that we're seeing right now is that we don't have a lack of people wanting to buy.
Right.
The consumer is actually getting more and more savvy. I mean, I would say prior to 1970, there was probably about only 30% homeowners. Right now, it's roughly about 54%, which is wonderful because the public is getting educated on the benefits of being a homeowner. But that pretty much continues the trend of that the demand is still way higher than the supply. Um,
Yeah.
and this credit isn't really going to help with that. It's going to get more people who are going to be interested, which is wonderful. But even if we have 100 people, it doesn't mean that another 100 homes is going to pop up. So that's the concern that we're going to see right there.
Yeah, I know. Like I feel like because inventory is so low right now, right?
Mm-hmm.
If this comes into effect, I say if because it hasn't yet, right? And like it's just gonna create more demand, and we're gonna have less homes, and people are gonna bid more. And right now, like our current buyers right now, Lisa, they're already like having a hard time getting their offers accepted, right? And like
Yep.
I'm not even talking about like we're submitting offers at asking price. We're submitting over. We're removing contingencies. We're shortening contingencies. We're shortening escrow periods. We're buying the home as is. These are the terms that we're writing up on our offers, and we're still getting rejected because there's just so many buyers coming in, right? There's so many of that going on, and the competition is just ridiculous right now that to some families it doesn't even make sense to buy a home right now because now the home that they needed was about 350 a couple months ago.
Yep.
Now that same home is 400K,
Right.
and some people are not approved for that amount, and it just weeds them out from the competition, right?
Right.
So I feel like even with this tax credit, it should be more like implemented in a market where it's a maybe a buyer's market or a more steady market, right? Where there's more homes.
Yeah.
So yeah, that's my thought on that. Now another thing too, why I mentioned if it comes into effect is because right now this program is just a unicorn,
Yes. That's
right?
true. Yes,
It's
that's
it's
true.
it's, it's just a unicorn. Like it doesn't exist yet. So I'm still getting
Right.
buyers calling me saying, "Hey, Chia, I want to buy a home, but I want to utilize the Biden tax credit." And
Right.
it's like, it's not out yet. You can't even apply for it if you wanted to because it hasn't been passed.
Well, it's not only that too. It's like it's still up in the air because it's so controversial, what it's trying to create and whatnot. I think um, most lenders will take a look at this. It's like, hey, why don't we give some incentives for the sellers who have multiple properties to release some of that property for the public? And the thing is, there's a lot of refinances that are happening right now because even with myself, I'm looking at the situation where it's like, okay, even if I buy my quote unquote dream home right now, I still have to fix it to make it into my dream home. So a lot of people are having so much equity. Basically, they're buying their homes 5 years ago and they just increased their value by $200,000. They're taking that money out instead of selling it. They're taking that money out and renovating their house however they like to, which also increases the cost of lumber, increases the cost of everything. I mean, lumber alone increased by 300%. So the reason why that's important to know too is material, all of that stuff comes into play. Less homes can be built right now. Home builders aren't releasing as many as they used to, where before every single phase that they come out with, there's probably about 50 homes. Now, you're lucky if there's about 15 to 20 homes per phase.
Yeah, I know. Like I think it's gonna be interesting if it does come into effect and it does become available to the public, because like we're gonna need more homeowners to put their homes on the market. Because right now homeowners, they don't want to put their home on the market. Because they don't know where to go.
Exactly.
When they sell their home, where are they gonna go? And now they're gonna be part of the competition now too.
Yeah, I
Right?
know.
And now there's gonna be even more buyers. So I think that's what's creating a lot of hesitation for homeowners right now to put their home on the market. Even though as much as we need it, and as much as all these homeowners know that the moment they put their home on the market, it's gonna go pending within like 5 days, 2 days, with probably 20 plus offers. Like, man, the other day one of our teammates, he submitted an offer on a home, and that home had over 120 offers.
Yep. Is
That
it the
went,
Citrus Hill one?
yeah. It
Yeah.
went from 300. No, it went from 400K to 500K plus.
Yep.
That's $100,000. Oh my gosh! Now I'm not saying that's gonna happen to every home. I'm just saying with the demand right now, and with the increase and with the decrease of inventory, that is a possibility, right? So that's really interesting. It's gonna be interesting if everything does come into play and the Biden tax credit program does get put out. Now,
Right.
I think a good segment from this is interest rates, right? Because I think a lot of people feel like if interest rates continue to rise, which we've been seeing, that's gonna put a halt to the demand, right? Buyers are gonna want to buy less, because now 1 point difference in their interest rate is gonna limit them from what? How much of a purchase price now?
It
20,
really
30,000.
depends. It really depends, Chia. It
So
really,
let's talk
really
about
honest.
that. Let's
Yeah,
talk
it
about that.
really honestly depends on how your mortgage lender strategize that for you. For me, I'm a little bit more conservative because again, you really don't know what's going to happen in this market and whatnot. The trend may say this, history may say something else, and then you combine the two, you think you can have that, implementation, but really it's really hard to gauge that. So I like to be conservative and say, hey, even though I'm qualifying you for this, look for something a little bit under. I would recommend if you were qualified for 400,000, start looking in the 350 range. Okay, give yourself some wiggle room, and your lender should be able to
Yeah,
calculate your
yeah.
situation and also give a little bit of a cushion just in case these things happen. So when I say it really depends, Chia, it really depends because you know. It depends on what type of program that you have. Each program has its own difference in your debt to income ratio and how it comes into play and whatnot too. And then that's the other thing. If you're able to put, instead of putting 5%, do you have a little bit of wiggle room to put 6, 7, 8% in the case that interest rates happen to move up, or the home prices are driven up and you got to be competitive. So now instead of offering at 400, you got to offer all the way up to 430. That is very typical in this market right now. So when I say let's prepare people to make sure that you have all your ducks lined up, not just your current ducks and what the current market is looking at right now, but the foreseeable future as well. Okay, so that's one. Let's talk about what the interest rate is. So yes, the interest rates have risen a little bit. So last year, the average interest rate was roughly 2.74 for 2020. That is a huge, huge, I would call it an anomaly for the last 100 years. And I'm just looking at the chart right now, okay? Since 2019, 2020 had its own separate chart, okay? But 2019 to 2010, it's roughly around that decade, the interest rates range from 3.625, which is in 2016, which we thought at that time, before this whole thing happened, was the lowest rate at that time. And it ranges from 3.65 all the way to 4.69, okay? So on average, that looks roughly about 4.5%. 4.5%. So before 2020, the average interest rate in the last decade was 4.5. Right now, yes, it is rising, but the average interest rate in the last 4 weeks is roughly about 3.125. The average prior to that and last year is 2.77. So really, it's not that huge of a difference. Everybody wants to do it at the very low point. When you're buying stocks, when you're buying homes, when you're buying anything, you want to buy low and cash out high, right? Everybody wants that. But if you're just looking for that one triangle pinpoint, it's going to be very difficult. So cater yourself in a way where that, okay, if it reaches from this point to this point, you have a range that you can work with. I don't want it to go lower than this. I don't want it to go higher than that. And you would be in a much better position for yourself. Okay. I mean, interestingly enough, Chia, if we're talking about interest rates, every time I look at this chart, I was like, wow, it's so crazy.
Yeah.
That, what I quoted you for before was for since 2019 to 2010, right? In 2010 to 2000, it ranged from 4.69 to 8.05%, guys.
Wow.
Okay. And you can totally Google this. You can totally find this. So the average of that is roughly about 6.5%. I bought my first home in Elk Grove in 2004, and my interest rate was 6.5%, and I thought that was a whopping steal of a deal. Okay?
Damn.
Before that, guys,
Well, how much was the purchase price during that time?
Oh my goodness. I bought that home for 483 with all of the upgrades and everything like that. It came out to be 550.
Really? Even at that interest rate?
Yep, even at that interest rate, guys. Yeah.
And that was a good deal then, huh? You
That
must
was
be
a
thinking,
very good deal. Oh my gosh, it was a crazy, crazy awesome deal at that time.
oh my God, man,
I know.
I can't even fathom that happening now.
That's only 15, 16 years ago,
Oh my God, yeah, that's insane.
right?
Do you still have that property? You say you do, right?
No, I don't. We got rid of that in 2009.
You think that if you would have still kept that property, you would have made some money on that? It would have had equity now?
Yeah, for sure. If you were able to wait it out and whatnot, you'd be able to recoup that. But honestly, Chia, what we did was when we sold that house and everything like that, we waited until 2011, and I bought a house that's 700 square foot more. That was only 306.
I know. Because that was
So
after the mortgage crisis, right?
right, right. And I think the $1 million question here is everybody's like, well, that market is so crazy right now. I'll just wait until it goes down some more. I'll just wait until it goes down for more. So I'd like to reiterate it and have a side conversation on that and why I don't think that that's going to happen. And again, this is just my personal opinion. I'm looking at a lot of things. Back then, loans were very, very different. I mean, if you had a social security number, that's really all you needed.
Yeah.
There was no way to really verify income and whatnot. Everything that's tightened up and strict now is because of everything that happened back then that caused that fall to begin with and
Yeah, I
whatnot.
know.
Okay,
So let's
prices
talk.
were highly invaded.
Yeah, let's talk about that. Like, I mean, I still get people today, or like buyers today, that spoken with somebody prior that bought a home in during the '07, '06, '08 days, and they just feel like the process right now is so strict, right? They're thinking, man, like, why is this lender asking me for my whole life story? Well,
Right.
it's because they really want your life story because of what happened in '08. They've learned from that, right? So,
Right.
can you share a little bit about more of the process of a mortgage application? The moment somebody comes in to your office and says, Lisa, I need a loan app. I want to get qualified to buy a home. Like, what are all the steps needed, and like, what happens behind closed doors, basically?
So behind closed doors, there's a long laundry list of things that has to be done. But really, for the consumer side, for you guys to know, the big three things that lenders look at is your credit, your income, your assets. Okay, so those three main things. And really, what those three things tell the lender is how much is this going to stress you out? Because if you're stressed out, then that'll stress the money that the lender's backing you up for. Does that make sense? Okay, so there's a lot of things that can happen. You can't control that and whatnot. But what you can control is like, hey, look, if you're two household income, what I would say is the bank will allow you to go up to on a 3% conventional loan, allow you to go up to 45% debt to income ratio for if you have excellent credit, you can go 5% with up to 50%. For FHA loans, you can go all the way up to 57%, which is great, but you got to take into account, right? When you're talking to your mortgage lender, make sure that they're open to building a budget analysis for you and say, hey, lenders don't care about your utility bills or your kids' bills or, any of that stuff when they're taking it into account, but you should. Okay, you should say, okay, if Uncle Sam is going to take 25% out of my paycheck at the end of the day, even though the lender is allowing me to go up to 57%, 100, that's almost 60% of my income already. And if Uncle Sam's taking 25%, that leaves me a very little wiggle room for groceries, gas, kid expenses, and life events happening. So you want to position yourself where a lot of realtors and a lot of lenders out there will try to sell you as like, well, this is the max you qualify for. The market's just so crazy right now. We're going to have to touch the max. That's where you're going to get in trouble, right, Chia? That's when, if the interest rates rise or you have to bid up and everything like that, you can't. So you got to walk away. You have no other choice. But if you start small, and a lot of times as first-time home buyers, I know it's really, really hard because you fall in love with this beautiful concept of, oh, I really like that floor plan, or I really like that kitchen, I really like those cosmetic things. Well, you can absolutely do that as you progress in your home. Your first home is not going to usually be your forever home. So start there so that you're comfortable and you build a lifestyle that's worth living, instead of having that mortgage come to you every single month and scrambling to figure it out. I was like, okay, we can't have this month, we can't have this, and you're on a super duper tight budget.
No, yeah, like I totally agree with that. I think the number one issue that people are having is they're going online, right? They're going online or they're calculating their mortgage calculator. And I think sometimes what they do is I've done this too, where they won't input all their debt, or they will kind of come up with a certain equation where the mortgage calculator told them, "Hey, I'm qualified for 500K, but how come when I came and spoke to a lender and gave them all my documentation, they only qualified me for like 300K? Like, what the heck is going on?" So I think people are kind of missing the whole the whole story of what goes behind closed door, like what you just mentioned, right? There's so much that falls into it. Like if you're talking to a lender right now and you're not allowing them to run your credit, what are you hiding? Because they're gonna find out whether it's whether it's getting close to the escrow process, or once you submit an offer on a home. Like, you're gonna waste a lot of times if you go that route. I highly don't recommend you going that route and waiting till you find a home and they accept your offer and then you run your credit, because now you're not really a well qualified buyer and you shouldn't even be submitting offers anyways in the first place, right? But of
Right.
course, that's a story for another time. But I feel like some buyers are just they're in denial. I get it. I get
I
it.
can I see where you're getting with that and everything like that too, Chia, because there's a lot of times the internet is a beautiful, beautiful place
Uh huh.
filled with knowledge, right? The problem is there's no regulation to really say whether or not that knowledge, quote unquote, is actually accurate, right?
Right.
And everybody wants to sell everything on the internet. If you ever apply for a mortgage, or if ever you look in real estate, you ever notice that all of a sudden now you get a whole bunch of people calling you, or a whole bunch of pop-ups on your phone, telling you that, oh yeah, the interest rates are X, Y, and Z, but then there's a fine print that says it's going to cost you $50,000 to get that interest rate, or something really
Yeah.
crazy, ridiculous out there, right? And go with the people who are, have the courage to tell you the truth. And
Yeah.
this is why it's so important to be fully pre-qualified. And a true mortgage professional will have to take their time to look at it. And let me go ahead and give you some examples. Okay, so let's just say, for instance, you are a wage earner that was affected by COVID. You used to work 40 hours, and now, because things are coming back to normal and everything like that, you're only working maybe 32 hours. And sometimes it's 32 hours, sometimes it's 40 hours. Well, lenders have to calculate the average of that income. So if the average is smaller, now that makes a difference in your qualification. Where if you're putting online that you're making, $15 an hour, $40 a week, but you really, some weeks are 40, some weeks aren't. That makes a huge difference in your qualification. And then if you're also calculating your tip income or your bonus income or your commission income, your average may be very different from the average of what each lender is going to do for you. Typically, the rule of thumb on those types of incomes is the average of 2 years. So again, if that income was highly dependent on last year, that average may be a lot less than, unfortunately, that you think. So we got to make sure that all of that is squared away. When you're putting in an offer, you got to work with professionals that will tell you, that again, will have the courage to tell you the truth and say, hey, in order to play this game, you're going to have to prepare for this marathon. Earlier, Chia, you were mentioning, I was like, okay, a lot of times people don't like to do paperwork. Paperwork can be very, very cumbersome. It's completely understandable. Okay. But you got to get that out of the way so that you can be prepared. It's kind of like a marathon. You want to do all your conditioning, all of your prep work, all of that ahead of time so that when the race starts, when you purchase that house, that's when that race starts. We only have a certain amount of time to close that deal for you and to make sure all the funds and everything like that lined up for you. So if you don't start conditioning ahead of time, what are the chances that you're going to think that you're going to be able to win that race against every other buyer, against everybody else that's fully prepared and ready to run? Does that make sense?
Yeah, it makes a lot of sense. So, um, I think too that when sometimes buyers just don't really. Maybe it's because like they've been waiting to get their ducks in line for so long that they just kind of want to hear good news,
Yeah.
and then when they hear another bad news, it just shoots them down. It just discourages them so much. Like I had a viewer comment on one of my videos the other day saying, "Man, like I've been told all my life that I shouldn't buy a home until like I prepare savings, until I get my credit in line, until this, until that, and then now I'm still renting." And then so like to a person like that, I would say, like I think your time is coming up. Like don't give up. I get first time home buyers all the time that are in their 50s, late 40s. Like it's a marathon, right? It's not a race where you're trying to get first place and you're trying to be the first one to buy a home. Yes, I bought my home when I was 17 and a half, which is not doable, but like, you know what I mean? And so like it's a marathon. So like if you've been told all your life that you need to do this and do that, then I would highly suggest that you speak to a local loan officer that you trust and that isn't gonna sugarcoat anything. Just tell you the truth about your finances, about your situation, and provide options. Like we talk to buyers all the time where they're not qualifying. We tell them, hey, look, but here's what you can do so that you can qualify maybe in April, maybe in October, maybe next year, maybe in 3 years, and it's okay. Like I've been with some buyers where they've been with me for over 4+ years and now they finally got a home. Like
Yep.
right now I'm showing a client that you just approved. She's been with me since day one, since I became an
Yeah.
agent. That's like 5 years ago. I remember when she contacted me through Facebook and said, "Hey, Chia, I want to buy a home. Can you help me out?" And then we tried to qualify her, and of course, she needed to work her situation out. And it took her 5 years, but now we were just talking the other day, me and her. She was just saying, "I'm so excited, Chia. I'm finally looking at homes with you." It took
Yeah.
5 years. So that's just to encourage all of you buyers right now that are thinking about buying and felt like you guys can never buy a home. Yes, you can. You just got to discipline
Yes, you
yourself
can.
and you just got to have a coach, a loan officer that will guide you and coach you and discipline you to like, hey, pay off that credit card. Hey,
Right.
don't get a boat loan. Hey, don't go buy a car. Hey, don't do this. Don't co-sign for anybody, right? So
Right.
you just need somebody on your corner to guide you through that, and it's gonna happen.
Right.
It's gonna happen.
I mean, coaching in any field, coaching in any field is very, very difficult because it's kind of like, okay, nobody really likes to be the bad guy, but somebody has to be that. Somebody has to say, hey, if you really want those abs, you're going to have to do, 50 crunches today, 100 crunches tomorrow, 150 the day after that, right? It's the same thing. So when I have people come into me, and as long as you're motivated, I'm always more than happy to help coach and guide through. And I always tell people is like, don't think of us as your lender and as your realtor. Think of us as your coach, your cheerleader, your people who are just by your side, your entourage, really, that's going to root you on because we know this can happen. Both she and I came from very, humble beginnings and whatnot. So we know what it takes, how much saving
Yeah.
that has to be done. And we're telling you, you do not have to have, boku dollars in order
Yeah.
to get into this market. And if you're getting advice from everyone else, when you're asking about real estate or money in general, everybody becomes an expert. Whoever you ask is all of a sudden going to become that expert. But really, you got to put yourself in a situation where say,
Yeah.
hey, I really got to ask somebody that's been doing this for quite a long time. What are the strategies? Just like if you're going to go to a tax accountant and whatnot, you want the people who are strategic and know how to maneuver your money to make the most money possible. How do you save the most situation possible? And how do you win an offer without having to put, all of your eggs in one basket? How do you
Right.
do that?
Right.
And you can either Google it, do it on your own, and try to maneuver all of that and kind of do that trial and you know uh, error type of situation, or you work with somebody that actually has already done it for multiple people
Right.
and can do it with you at ease.
No, that's great. So before we move on to the next topic, which is the main topic of the day, let's go over some of the comments in the live chat. So
Oh, sure.
uh, AVC said that yeah, it's a great time to sell if you're leaving California, but not a good time to buy. Way too expensive. And to that AVC, I would probably say, well, before I say my opinion, like how do you feel about that comment right there, Lisa?
Okay, so again, you got to look at the numbers on that because there's a lot of people still that look at the numbers with me, and I share it with them. I was like, hey, look, let's just say for instance, you buy a house for 300,000 5 years ago and whatnot, right? And probably the house that you really want right now is roughly about 800,000. But because you've already increased $300,000 in your equity, now you're able to put more down on your next home. If the numbers work out, then it might be in your best interest to put more money on the home that you actually really like. And again, I won't know that until we really finalize and look at those numbers. And as far as saying it's great to sell, not great to buy, that's a perspective type of situation, right? And this is the reason why Sacramento is such a
Yeah, yeah.
hot market because so many people are selling in the Bay Area, which is only 2 hours away. Those same people who are now working for tech giants who didn't allow them to work from home, and these tech giants are looking at it and say, hey, you know what? Our people are doing pretty well working from home. They don't want to lose their job, so they're incentivized to not only work better, work harder, but because they don't have to worry about the commute, they're able to work better from home too. So there's a possibility that many of those companies will no longer have a brick and mortar, and if they do, it's going to be a much, much smaller facility. What does that mean? That means it drives people who are making $127,000, which by the way is considered poverty in the Bay Area. Okay, I know it sounds really crazy, but if you were to make $127,000 here,
Oh
it'd
man.
be the same. There's a lot of physicians that make the same in the Sacramento area as they do in the Bay Area. So they're able to buy the houses in cash and whatnot, which is also driving up the market and everything like that. And a lot of times that may sound a little bit discouraging for true Sacramentans. Don't be, okay? You guys have first inside scoop. Bay Areas, a lot of these people are just buying these homes sight unseen because they're thinking, oh, it's like, oh well, it's just such a hard market and everything like that. I'm just going to do it that way. You don't have to do it that way
I
because you
know.
already know. You already know. You
Yeah.
have realtors that are, like Chia, who already know the market so well and already know the neighborhood. And if you've lived here your whole entire life, you know the difference between one neighborhood and across the street the other neighborhood, right? The
Yeah.
difference between the borderlines, the difference between school districts and things like that too, that makes a huge impact and a huge difference on real estate. So a lot of times the question that people have in regards to should I buy now? Okay, when you outweigh the pros and the cons and you say, okay, well, if you're paying $2,000 of rent already, that's pretty much a gimme. You got to start looking at buying because the average mortgage right now is roughly about 2,000 to 4,000, depending on what type of loan and how big of a loan that you want.
For sure. Yeah, and I think everybody's situation is different, right, Lisa? Like,
Yeah,
not everybody should buy right now because of their situation. And like I said, it's a case by case, and there's so many variables that would determine whether you should buy right now or not. And the best way to find that variable is to talk to somebody you trust, a local expert that will walk you through the step and tell you, hey, buyer, you got a lot of debt. You should not be buying as much as you want to buy. Yeah, that rent is expensive, but you have a lot of debt, and if you add on another mortgage, you're gonna be house poor. Like,
exactly.
that can happen. So I think people confuse that with the price is too high, I'm not gonna buy it. Yeah, but
Correct.
what if you buy a price that you assume was too high, but you're making the same payment as if you're renting a house?
Correct.
Then
And
it's a
see,
no-brainer.
I mean, there's so many things that you could do as a homeowner. So if I'm always going to be a little bit biased in home ownership because that's the reason why I am in this business in the first place, because I love being a part of the journey of such a huge, huge milestone for people. And I'm sure you love that too, Chia. I mean, we do this day in and day out and everything like that to try to educate the public that, yes, it's not always for you, but there's so many strategies to say, hey, if we limit this, if you cut this out, if we worked on a budget analysis to say, hey, in the next 12 months, if you pay this down and everything like that, you're going to have $1,000 less in all of your payments and all of your credit cards, which gives you $1,000 of a difference to put into your mortgage, which eventually goes back to you anyway. When you're investing in your own home, you're really technically investing in yourself because that goes back into the money, into a home, into an asset that you own instead of somebody else owning.
Right. Yeah, you're exactly right. Now, let's go down to the next comment, okay? That one
Okay?
was really, really intense, and I think we could probably have a whole live stream about
Oh,
whether
yeah.
you should buy or not next time, okay? So the next comment on the live chat was from One Chuparita. I hope I'm pronouncing that right. If I butchered it, I apologize, okay, Chichi fams? But they said, Lisa, you're very pretty.
Oh,
And then
oh,
another Chichi fams, Ferio8 says, way to go, Chia. This is a great topic. Lisa is awesome. Lisa is awesome.
oh.
She's
Thanks,
helped
guys.
me out a lot. And they also mentioned, is it the best time to refinance? I'll let you answer that.
So anytime you want to know any of that stuff, please send me your information so I can calculate the numbers for you. Because if the numbers make sense, if you are saving money, then absolutely yes. As I shared with you the chart earlier, in the last decade and whatnot, the average interest rates was 4.5%. So if you guys bought and your interest rate is more than 4%, I would absolutely want to review your situation and show you, okay, if you do this, this is how much money you're going to save on a monthly basis, this is how much money you're going to save on a yearly basis, and this is how much money you're going to save overall. Why that's important, and a lot of lenders don't do it. I love to do that for my people, just simply because I want to show you how much you're going to be saving on the long run. So if you decide that, hey, later on we can cash out a little bit, buy our other home, keep this one, rent it so that we can have some rental income. And if you're doing it and you're shortening your mortgage life, and let's just say, for instance, you're in your 30s, right? And you keep that loan for, let's just say you had that home and you bought it 5 years ago, the interest rate was 5%, something like that, and then now I can get you an interest rate of 3% or whatnot, okay? You save all of that cash on a monthly basis, you rent it out, you're going to get a cash flow positive. And what that means is, say for instance, your mortgage total is about $1,500, but the average rent for that property that you can rent it out for is $1,800. You just earn yourself an additional $300 a month. And think about that. Think about the multiple properties that you can generate from that by the time you get to the age of 60 and you have 4 or 5 properties, how much more money that's going to make you when you no longer have that mortgage, what it can go towards, and what your life would actually look like at that time. That to me is super exciting. I love helping people look at that big picture.
Yeah, that's great. And like, I think a lot of times I believe why individuals don't pursue that is because they don't know. Nobody
Correct.
educated them, and they're also afraid to kind of seek out these information, right? Because they believe me, like when I say this, Lisa, like so many people approach me and say, like, Chia, I want to talk to a loan officer, but I don't have money to pay for the consultation. How much do you charge
Mm.
for a consultation, Lisa?
The consultations are absolutely complimentary. $0.
That's why I tell everybody, and
$0.
I think for individuals, they think that's just too good to be true. It might not be accurate, but I'm telling you guys and gals, if you guys want to know how your situation is like, go talk to someone that you trust because it's most of the time it's complimentary. These loan officers don't get paid hourly. They don't charge a retainer. They some
Yeah,
do, but just vet everyone. Vet
correct.
everyone. Call a group of loan officers and just say, hey, I want to get a consultation about my situation from A to Z. Do you charge for a complimentary consultation? They would tell you. They have to tell you. So
Correct.
just do that. Talk to like a few and then go from there. All right.
Correct.
So okay, let's.
There I mean, when we're doing any type of business, when we're doing any type of business, there's always a cost to the business. And a lot of times, there are lenders out there that put the cost on the consumer. There's nothing wrong with that. It's just, the cost of doing business, and that's totally understandable. But again, because I'd like to think that we, at a new lending, we come from contribution. We're like, you know what? You really don't know until you really know what your situation is so that we can determine, okay, based on this is what your situation is. You really got to rip off that Band-Aid. That's the first initial step to get this done and whatnot. And then after that, it should be a breeze. If you do all of this, again, if you condition, if you do all of that prep work ahead of time, it's going to be so much easier when the time comes when you purchase a house. You're not scrambling and it's not a stressful rent. Any of you guys have ever been a part of helping out a wedding? I'm sure you guys know that feeling of why didn't we do this ahead of time? Now where everybody's just scrambling, everybody's stressed out. We don't want that. The stress should belong to your realtor and your lender's shoulders because we can handle that. We've been doing it for long enough. The excitement should go back and bounce back to you.
No, for sure, 100%. So, okay, let's move on next. AVC says, I like the honesty. We always try to be honest up front, AVC, and just be transparent because, again, if anybody is lying to you from the beginning, it's going to show in the process of the transaction sooner or later. So,
Right.
honesty, I feel, is the best way I sleep because I need my sleep, especially with a newborn. I only get 2-3 hours of sleep now. But yes, I like my sleep. So honesty is definitely how everybody should be doing it, ABC. Thanks for the comment. One Chupa Dita, again, I'm sorry if I'm butchering your name, mentioned if I buy a home that's $475,000 and I put 10% down, how much does it cost to buy out PMI? Lisa, I think that's for you again.
Okay. So again, that's going to really depend on what your credit score is. Okay. So I'd really have to run your situation privately. If you want to go ahead and send me a private message and everything like that, I'll be more than happy to send you your own chart and everything like that, and that way you can have some sort of a number. A lot of times lenders do prefer to run your credit and all of that stuff ahead of time just so that they can be a little bit more accurate. But if you do know your situation well enough so that I can say, hey, based on what you're telling me verbally, I can give you some sort of numbers to work with.
Yeah, and I think running certain individuals' case like that on public live stream like this is a little bit too much. So like we don't really want to go into the too much detail about your personal life. So I would highly suggest you guys just reach out to Lisa again. I all her contact information is in the description box. So if you guys don't know already, if you guys want to just reach out again, she's pretty friendly. She doesn't bite. Like I haven't witnessed her biting anybody yet. So reach out to her. Okay, so the next question is from ABC. A slap of reality hurts but will save you. Yes. The
Yes.
truth will set
Yes.
you free. That's what I've been told all my life. Ferio8 says, that's why get a good paying education and have a well balanced lifestyle. There's no miracle of getting approved until you have a good credit. Yes, for sure, of course. Good credit, like what Lisa mentioned earlier, is going to give you better interest rates, which is going to qualify you for more, which is going to put you in a better position when it comes to getting a home loan.
Yeah. Chia, can I interject just
Of
a little bit?
course.
Okay,
Definitely.
so a lot of times people get caught into this perfection, okay, in anything. Don't let perfection be your paralysis, is what I'm going to share with you, because a lot of times when people hear these, it can get a little bit discouraging for those of you who are working on your credit and whatnot. Life happens, you know. You definitely shouldn't be judged for your life circumstances. You can absolutely get out of it. And this is the reason why there's so many different loan programs. You can absolutely go to an FHA loan. It is not a bad loan. It is a great starter loan for people who are working on that. And in that way, the reason why I say that is because the interest rate's only going to fluctuate about 1% of a difference, if even that, if you have a lower credit score, okay? And the reason why I say that is because the home prices are increasing about 6 to 11% right now. So why don't wait for that perfect situation, because the cost of homes is going to rise faster than you waiting for that perfection to happen.
You heard it here. But okay, so the next question is again from Ferio 8. Man, you are flooding this live chat, Ferio 8. Awesome. I'm glad you're on the live stream. So she just says, he or she just said, I am so glad I had Lisa as our loan officer. She is straightforward. Oh yeah, there you go. That's a
Thank
comment for
you.
you. Buy the least pretty house in a good neighborhood and get a realtor like Chia. Oh man, thank you, thank you. Lisa showed us a great layout of a percentage and amount of the loan on a ledger sheet. Got out from 4% down to 2.5% down. Yeah, like I said, Lisa mentioned earlier, just reach out to somebody that you want to talk to and trust, and have them give you like a ledger, similar to how Ferio 8 received from Lisa. I wonder. I'm curious who this Ferio 8 is now. But anyways, that's what you want, right? You wanna be able to have like options in front of you and just view those options. How much my payment is gonna be if I'm putting 2% down, 3% down, 5% down, 20% down. How much are my closing costs gonna be? How much are my payments are gonna be? How much can I afford if I do that route? It's so important that you have that laid out for you, so that way you could pick and choose which home you want to buy. Because if the home that you want is under 300K, then maybe you might want to go with a different option. But if it's over 300K, you might want to go with FHA. I don't know. Everybody's situation is different. That's why you want to talk to somebody like Lisa, a loan officer that you trust, so that way you could at least narrow down your options and find out which one is best for you and your family. That's why I always like to say, get educated about yourself. By the time you're done buying a home, you should already know the whole process if
Right.
your agent and your loan officer has educated you enough.
Right. Absolutely. You want to know your loan backwards and forward. When you sign those loan documents, it depends on, what type of loan you have. It can be anywhere from 80 pages to 300 pages if you're doing a down payment assistance program. It's super overwhelming. It's like a novel. So you want somebody that actually has pretty much either memorized it, can read it backwards and whatnot, so that they can explain it to you exactly what you are getting yourself into and how long this loan is going to affect your livelihood.
Yeah, for sure. We found out who Ferio 8 is. It's Mark and Abby from Elk Grove, E-Group.
Woohoo!
Oh man, what's going on, Mark
That's
and
my
Abby?
peeps.
Yeah. Okay, so that's all the live chat for right now. Let's go on to the topic, right? This is probably the biggest controversial topic that everybody's talking about right now. I've been getting people asking me, Chia, the market's gonna crash this year. The market's gonna crash this year. Lisa, let's talk about that. How do you feel about that question right there in that comment?
Well, obviously, you see, my crystal ball, it doesn't really exist. It's imaginary and in my head, and I would like to say I'm so awesome that I can predict the future, right?
Yeah, yeah, yeah.
Um, but my personal opinion is this, guys, okay? The thing is, supply is lower by last year by half, by 50%. Okay, so there's less homes on the market. There's only about 3,000 homes right now on the market. And how many families are living here in Sacramento? Okay, that's well above uh, the norm and whatnot. And a lot of times people are looking for the cash, which is very understandable because what's the saying that always say? What goes up must come down, right? And they're waiting for that to happen. They're waiting for 2008 to happen. And let me tell you why I don't think 2008 is going to happen. Is because there was an influx it wasn't that there was more demand in 2008. Okay, there were a lot of fraud that was going on. There was a lot of guidelines that weren't put in place and whatnot. Okay, and there were loans that you can put 0% down all day. Okay, people were doing multiple things that they shouldn't have. You know, not being completely honest about their income and about their situation. And the banks, the brokers, lenders were getting greedy and coaching people incorrectly. And that's what happened at that time. And there's so much more to that, but I know that we are on a limited time basis. We can get into that on a next segment. But as far as the market crash goes, so in a good market, okay, it takes roughly about 15 to 20 years for the real estate to pretty much adjust itself. On a regular time frame, it's roughly about a decade. Every decade, it kind of adjusts itself and everything like that. We are well past that mark, so everybody's kind of waiting for that shoe to drop, right? But again, because of all the correction that already happened in 2008 and whatnot, builders aren't building as much as they used to. Okay, so they're not bringing a lot of inventory because of the cost of goods and everything like that has gone up significantly. That hasn't been able to bring inventory back any faster or anything like that. There's no quick fix to that, unfortunately. The other thing is look at the trend of what the jobs are coming out of. There's a lot of people right now, you can be entrepreneurs. The dream is to be that entrepreneur so that you can create your own company, be a multimillionaire that way. We are not teaching our kids and our generation to be laborers. And why is that important? If you're in contracting right now, please let me know. We could use some really, really, really good contractors right about now, but they're either super, super busy or they're getting into that age where physically they can't do this type of laborious jobs anymore. And if the younger generation isn't coming up to do that, what do you think is happening? Okay, that comes into play and that affects how many homes are being built in the big spectrum of things. And then when you're going to come back and say, okay, well, interest rates are rising, so people are buying less and whatnot. And it's like, guess what? Interest rates are rising, but they're still, again, historically low. One. Two, guess what's also rising, guys? Rental. There's a long list of people that are waiting to get into rents as well. So in a bad economy, rent actually goes higher because all those people who quote unquote lost their homes or need to move out, they also need to rent. Okay, so I don't feel like it's going to crash. If it is, it's not going to be anytime this year. I don't even think it's going to happen next year. Just guess again, inventory is just so super low. And what the pandemic has caused people, it was not a great thing and whatnot. Everybody kind of like either a fight or flight type of situation where you bound together and you become more appreciative and grateful for the people around you and the things you have, and it kind of changes your perspective to want to have a better lifestyle, right? So that's where you're also seeing more influx of buyers and whatnot. And on top of that, many first-time home buyers in the millennial age group, which is the highest buying pool right now, have watched their parents, and a lot of these parents are telling us like, okay, well, we didn't get a chance to buy our house and everything like that, but I want better for you. So the public is now getting more and more educated because of social media. And because of the technology that we now have at our fingertips, people are getting a lot more savvy and more people are buying. We're coming into a generation where more people are buying now than they ever were before, which increases that demand. But again, that supply just hasn't caught up yet. So that's my roundabout answer for you. I'm so sorry that it's not a concrete one because there is none in this market right now.
I do want to share that depending on where you're at, there might be possible signs of a market crash. Every market is different, right? But as a
Yes.
whole, currently right now in Sacramento, I don't see a crash happening either. Like there's no inventory to justify it yet. The demand is that's showing right now is not showing any signs of a market crash. Like if you guys are like members of the Chi fam, right? It's so funny every time whenever I say that now. But if you guys are like part of the Chi fams, you guys would know that I upload monthly market updates, and I do that for a reason. I want you guys to know where we're headed, where we came from, and the data. And data don't lie. Inventory is still low, way below a month worth of inventory. I think the last market update I did on Tuesday was zero point 0.6, 0.7 month worth of inventory. Man, that's crazy low. Average price is up 2 to 4% every month. That's crazy. Every month, average price is going up 2 to 4%. And like, until you start seeing the average price go down, until you start seeing the days on the market go up, until you start seeing inventory going up, I I don't see that justifying a market crash at all. Like, I know everybody that calls me, that reaches out to me, or maybe even yourself, Lisa, are probably saying, I'm waiting for the market crash, Lisa. I'm waiting for the market crash because I got all this cash and I want to be able to buy homes when they're dirt cheap. It's
Yep.
not happening this year. Yes, we went through a chaotic 2020 into 2021. Yes, we went through all of that. A lot of people lost their jobs. There was a lot of unfortunate things that's happening, but the demand is still there. If you know about supply and demand, you would know that, man, there is no signs of any market crash coming anytime soon. If you're watching this from a different state and the crash is currently happening right now, let me know where it's at. Like, comment below. I might want to buy in that market, you know? But then, if you guys are hoping that it's gonna happen this year, I don't really see that. Like, even if you go to new builds, they don't. Every new build that I show my clients right now, they're on waiting lists,
Yep.
and they're getting into bidding wars. Lisa,
But
new
I'm
builds
surprised they
right
haven't
now.
started the lottery thing yet. So if you guys
Oh
don't
my
know, in
god.
2000 and well, I came from the Bay Area. I lived in the Bay Area for 27 years, and I came up here in 2004. And let me tell you, the reason why I came up into the Bay Area to begin with was because I too was on a waiting list in the Bay Area for a condo that was 3 bedroom, 2 bathroom at the time, and it was $650,000. Okay, and I was
Mm.
on the wait list, and it turned into what's called a lottery. Okay, so all these people on the wait list and everything like that, there was only like 50 homes that are available, but there were thousands of people on this waiting list. So they just pull out your name on their hat, and if you get it, you get it. You don't, you don't.
That's crazy. Lottery? Yeah,
Mm-hmm.
I have not seen that yet, right? So that means that it might happen sooner or
Uh
later.
huh.
But yeah, right now, like, before it got this crazy, Lisa, I was telling all my clients, hey, look, let's go be on the waiting list for a new build that you like, and then just continue looking at resale homes. And if you get a resale, then great, you can cancel on your new build because it's like 6 months to a year out anyways. So let's do that so that way you have backup plan B. But right now it's not even a choice. If you go and do that, you're on the waiting list probably longer versus if you were to go and look at a resale home, right?
Right.
Unless you're willing to bid. And before, I always encouraged that new build was a little bit more affordable, and it made more sense to buy in a resale because resale you were overbidding when that same price you could have got a brand new home. But now it's not even like that. New builds, you're overbidding 20, 30, $50,000 above the base price, not including
Correct.
upgrades.
Correct.
And that's what's going on right now, and it's so
Mm-hmm.
chaotic right now. It's insane, but that's how it is right now. And like, I am curious, maybe because this is such a controversial piece, Lisa, maybe next week what we could do is I'll pull up some trends on the weekly market in Sacramento
Yeah.
here in El Grove, so that way the Chichi fams can kind of see like what's changed week by week,
Yeah.
right? And then on top of that, I'll still do my monthly update videos too. So like, if you guys are not subscribed to the channel, like, you guys should definitely subscribe and be part of the Chichi fam, so that way you guys don't miss my uploads. But yeah, it's pretty interesting to see what this year's gonna be, Lisa. I am very curious. It's gonna be shocking if the market does crash, but I don't see that happening at all.
I don't see that happening just because I have way right now, even though I really love working with home buyers, I got a lot of people who are investors like myself who are just waiting for that pulse and everything like that. So when that market quote unquote crash, all these investors want to buy. So it's
Right.
really hard for it to crash when there's still people who want to buy.
Yeah. No, for sure. Um. Okay. Well, man, we went a little bit over an hour and 15 minutes, Lisa, just because we're having so much fun, right? hopefully,
Yeah.
hopefully everybody's being entertained right now too in the live
Yeah.
chats. But we're gonna be doing this on a weekly basis, y'all. Like 1 o'clock Friday. So this was pretty fun, right? I told you it was gonna be that bad.
No, it wasn't. I was sweating bullets before, but I'm okay now.
Yeah, once you get in the mojo, it's gonna be great. But one last comment is from Ali. or Ally Cakes. You're both amazing, and I love your honesty to your clients. Oh yeah,
Thank you.
it's all about honesty, Allie.
Hmm.
But okay, I think we're gonna end it here. We're gonna end it here. We took too much of your time. We apologize in advance. But if you guys are watching this in the replay, like share this, like, comment. If you guys have more questions for the next live stream next Friday, comment down below. I'll be putting up another poll, and then we'll get all your questions answered. Other than that, I think we'll catch you guys in the next live stream. All right, but it's been a pleasure going live with you, Lisa. Looking forward to the next
Yeah,
one.
that was fun. I hope you guys all had fun too.
Yep. All right. Well, you guys take care now.
Happy Friday, everyone.